We are back with the man, the myth, and the legend, Plan B. Plan B, can you hear me?
I can, Anthony, John, Joe. Hi, how are you doing?
We're doing fantastic. How are you?
Yeah, very good. Very good.
I bet you are. All right, first I want to start with stock to flow model. You're the creator of this, and most people point to it as kind of the single guiding light to them in terms of the relationship of Bitcoin's price to these halving cycles. So talk us through a little bit about what the stock to flow model is and then what it's showing us so far.
Yeah, so the stock to flow ratio is a ratio from the commodities market, actually, that tells you something about an asset's scarcity. It divides the stock, the reserves of a certain asset by the flow, the newly issued Bitcoins or gold, newly mined gold. And if you divide the stock by the flow, you get the stock to flow ratio. So that ratio was known for ages in the commodities market. What I did was connect that with the market value of, Bitcoin in the beginning, but later also the other assets like silver and diamonds and gold and real estate. And what you find that there is a perfect linear relationship in the logarithmic space. So that was quite shocking. And with that, you can actually predict the price of Bitcoin very roughly, I should say, but you can do it. And because we know the stock to flow ratio of Bitcoin, it's pre-programmed, and that's a very nice thing. And it's of course very bullish. At the moment, it predicts somewhere around $100,000 Bitcoin for the current halving cycle, which is 2020, 2024. So we're actually heading towards that. Yeah, it's that.
So when you think of the stock to flow ratio, one of the things that I'm fascinated by is it comes from the commodities market, but it's actually potentially more accurate when it comes to Bitcoin because we know with certainty and can prove the supply of both the outstanding supply and the daily incoming supply. Describe a little bit about why that certainty and that verifiability is so important to the accuracy of a model like this.
Yeah. So, for example, with gold, we don't know how much gold is mined every year. We can make a forecast, but we don't know it precisely, and a lot of factors impact that supply, that mine supply of gold. And one of the factors impacting that is price, right? If the price of gold is high, then the miners will increase their production, and if the price of gold is low, they will decrease the production and the mining of gold. With Bitcoin, the whole production, the whole flow is pre-programmed. Every 10 minutes, on average, right? Every 10 minutes there's a block, and in that block is a block subsidy with the new Bitcoins for the miner that found the hash of that block. So we know sort of that every 10 minutes and for the whole year, how much Bitcoins there will be mined. Of course, we don't know it exactly because there is some variability in the 10-minute interval. Sometimes it lasts an hour. Sometimes you have like 3 blocks in 10 minutes. But on average, we know, and especially long term, we know what the stock to flow ratio will be, and thus what the price will be roughly.
So when you think about these halving cycles, obviously there's a supply shock, but how do you think about kind of the cyclical nature of this, right? Is there a point where you expect the model or ratio to be invalidated, either through external forces or people start to kind of price it in and front run it? Like, how do you think about the fact that we do know the supply and that helps for the accuracy of stock to flow, but at some point, does that become a negative?
Yeah, there's several aspects to that. Of course, from efficient market hypothesis, you would expect that this knowledge and the model would be priced in. So I actually, and most people with me expected the halving, the May 2020 halving would be priced in already. So we would not see the actual price rise that we're seeing now. That is very much in line with the stock to flow model, because all the information is out there, the stock information, the flow, the stock to flow ratio, and the model. So it shouldn't follow the model as closely as it does today. On the other hand, there's a lot of people not believing the model, and the model, of course, hasn't proven itself. So maybe that sort of puts the efficient market hypothesis argument aside. But on the other hand, I think that the stock to flow model will break in the future, because one of the nice things about the stock to flow model, and especially the stock to flow cross asset model, stock to flow X model, which also incorporates data from the gold market, diamond market, real estate market, and silver market. So other stores of value, if you will. If we look at that stock to flow X model, we can interpolate the data because gold has a higher stock to flow ratio than Bitcoin, and real estate has a higher stock to flow ratio. Gold is 60, around 60, and real estate is around 100, where Bitcoin is 50, 55 right now. So we know we can, within the data set we have available with gold and real estate in there, with market values of 10 trillion for the gold market and 100 trillion for the real estate market, we can interpolate within the data set, and of course that ends, because if Bitcoin will have its next halving in 2024, the Bitcoin stock to flow ratio will jump to 100, which is which is approximately the same as real estate. But after next halving, when we jump to 200 stock to flow ratio for Bitcoin, we're out of the model data bounds, if you will, and then we have to extrapolate, which is what basically all the other models are doing. They're extrapolating into the future, which is very dangerous. And one of the big assets, big advantages of the stock to flow model, the stock to flow X model in particular, is that this interpolation can be done. So to be in short, I think the stock to flow model will end to be valid somewhere after next halving, when the stock to flow is above 100, because we cannot interpolate anymore. And of course, that means probably that the dollar, the denominator in that model, will end to play a big role, or something. Of course, it doesn't say that Bitcoin will die or something. It's it's just a model, will not be very accurate after that.
For sure. And one of the things that I appreciate about you is not only can you look at something like the stock to flow model and talk about kind of these cyclical natures of the halvings, but also you've got a very good understanding of market structures and various things that happen on the exchanges. You had a tweet recently talking about these sell walls as kind of pure scare tactics. And we've pulled up the tweet here. Describe a little bit more about what goes on in these order books with these sell walls and how folks are using them as a scare tactic.
Yeah, what most people maybe don't know is my background is in institutional investment, and I've been in institutional investor roles my entire life. So I started at a dealing room in FX trading, then went to banking balance sheets and insurance balance sheets, and lately my latest job was managing a pension balance sheet with the team, and that balance sheet was 100 billion US dollars approximately. So I spent my life chasing those charts that you have in front there, and chasing those sell walls and buy walls. And what I noticed was that most people are sort of scared by those big walls, those big sell walls in this case, in that chart. And of course, most of the time, not all the time, but most of the time, these sell walls are just there to scare people in not buying or even selling, and because they signal, don't come here where there's at the price level where the sell wall is, because we will sell and we will keep the price under this level. But in fact, what you see in real life 9 in 10 times, you see that as the price approaches the sell wall gets cancelled and moved further away. So in this case, the sell wall will be moved at a higher price. So it's just scare tactics, and I thought it was a good thing to put that in the tweet for other people to know.
For sure. No, I think that people really appreciate that one. When you start to think about whether it's the sell walls on the order books, whether it's the stock to flow ratio, how do you think about what I'll call more quantifiable metrics and analysis with things like regulation or things that seem to be more external to the asset itself? Do you worry about that stuff? Do you think about it? Do you incorporate it in any way into your analysis?
Yeah, I certainly think about it and follow it like a hawk, because the big moves in Bitcoin were all sort of triggered by regulatory changes, regulatory clarity. So I track all the important news and I put it in a database as well. However, I don't use it as an explicit input variable in my models. Both the stock to flow model, which only has one input, which is stock to flow ratio, but also the on-chain models or the floor models, or more technical analysis based models. They don't use that kind of information. But in fact, those kinds of news events, it could be regulatory news, but it could also be other macroeconomic news, like El Salvador adopting Bitcoin or China banning Bitcoin, etc. This kind of news is very difficult to predict once it happens, and what the impact will be. Is it priced in? Do people expect it or not? So I regard those as trigger events that create an outlier in the model, or and that means that there is a spike above the model value or below the value of the model. But those spikes, those trigger events are very rare and are very like black swan events. So they cause some variation in the model, some model error, but they don't disturb the general trend in the models. That's what that's how I look at it.
And how do you think about your investing philosophy? Do you try to trade around the asset based on all of the data you look at? Are you just dollar cost averaging, buy and hold? Like talk to us a little bit about the philosophy that you use, given that you do have at least an understanding of what some of the data says. Does that change what you do at all?
Yeah, but I'm more an investor than a trader, and certainly not a day trader. So I was lucky to buy Bitcoin in 2015 and 2016 when the price was 400, 500 kindish. Those are my Bitcoin investments, and I've told in other interviews as well that I sold half of that stash in shortly after the peak in December 2017, based on stock to flow kind of models. So and I reinvested that half that I sold just before I published the article about stock to flow, because I knew we were at a very low level compared to the stock to flow model at that time. So in that way, I sort of trade or sort of try to time the peaks and the bottoms, but that's on a monthly or even yearly basis, and I certainly do not trade on an hourly basis. That being said, I am very intrigued, as you know, by on-chain analysis. I do a lot of on-chain analysis, and I have a great team of quants around me that can do all sorts of programming, the blockchain data, and getting signals from there, and that's very, very interesting. And sometimes you can actually find patterns that are tradable on a daily or weekly or monthly basis, so on a shorter interval than I'm used to invest. And we are making use of those patterns with algorithmic trading software. So we write our own trading software that automatically scans for those anomalies and make use of that. And that was one of my skills also in my institutional career. That the algorithmic trading part is very, very interesting in the Bitcoin space.
Tell us more about the institutional interest, whatever you can share, whether it's organizations that you work at or have worked at, or just kind of conversations with former colleagues, peers, people you know in the industry. What's the general sense from the institutions in terms of Bitcoin, what they're allocating, how they're thinking about those allocations?
Yeah, so I'm Amsterdam based. I talk a lot with European investors, some US investors, but it's mainly a European perspective that I have. Well, certainly the companies that I worked were not very interested in Bitcoin yet, mainly because of regulation and well, misinformation, if you will, because most of them thought it was for criminals. It was for and governments would ban it and all that. And of course, for an institutional party like a bank or an insurance company, they have capital regimes with their central bank. So they'll have to put capital aside for every investment they make. If the investment is more risky, like Bitcoin, they have to park more capital for that investment. And for Bitcoin, it's almost 1-to-1. So if they would do $1 billion in Bitcoin, they would have to park $1 billion in equity as well. And that is of course not doable. It's more doable for hedge funds. So what I see is it's not the big institutions, pension funds, insurance companies, and banks that are investing on their own balance sheet or are interested in Bitcoin, but it is the hedge funds, the family offices very much so, and commodity investors, especially the gold and commodity investors are, of course, very much into the same philosophy that Bitcoiners have with sound money. And yeah, so family offices, commodity investors, and hedge funds, those are the ones I see active, and the other ones are will be late as usual.
And when you wake up in the morning, like, what do you check first? What's the data sources that you find most valuable, or in terms of just understanding what's happening in the market, whether it's a short term or long term period?
Well, to be honest, the price is one of the first things. The Bitcoin price, one of the first things I check, because that's the most accurate and timely information. If it's the same as when I went to bed, then nothing happened. If it has a big delta, then something happened, and then I go on Twitter, which I find is the most direct and accurate information source there is. Because well, one thing I learned is to not read mainstream media or watch mainstream television or even media sources like CNN and Bloomberg or the Wall Street Journal that are considered the creme de la creme in institutional investing. I've learned that with these new investments like Bitcoin, you better ditch those standard sources and go to Twitter and the experts in the field, because that's the most direct way of getting information.
Yeah. And when you think about portfolio construction for yourself or for the institutions, maybe both, is this still something that is like a very small allocation, or is it something that is being used to like denominate the whole portfolio? Or how do you just think about the portfolio construction and any sort of concentration targets?
That's a tricky question, because I think for institutions, of course, that's very important to keep the risk profile sort of constant and within their mandate. So they'll have to sell Bitcoin as soon as it rises to keep the concentration low and within mandate boundaries. But with hedge funds or family offices or for my own investments, I don't have those mandates or boundaries. So I can what I see in practice, that what starts as a small investment, a couple percent investment in Bitcoin, soon grows to a double-digit position in Bitcoin. And well, after a few years, 4 or 5 years, it sort of dominates your portfolio. That sure is true with my own investments as well.
For sure. And then before I let my brothers ask a couple of questions, What do you think is the likely price for Bitcoin by the end of the year? And do you think that the bull market ends at the end of the year, or does it carry us into the beginning of 2022?
Yeah, that's the most asked question. I would be very, very surprised if Bitcoin price would be below $100,000 at the end of the year. That would, well, sort of invalidate my view, my models, and that would certainly surprise me. I do think we will see a price that is at least $135,000 by Christmas, because that's what my floor model says. And basically, I'm using three kind of models that all say the same thing. So stock to flow, which has 100,000 on average for the entire cycle, and mind you, we're 1.5 years into that cycle and with below 100,000 prices. So we'll have to spend the next 2.5 years markedly above 100,000 to make that average. And the second model I use is the on-chain stuff. That on-chain stuff is really good at identifying bottoms and peaks. So we're now talking peaks, of course. So I know quite well, certain, not guaranteed, but I will have high confidence in that the on-chain indicators will signal a top. And if we look at the on-chain signals right now, I would say that top is at least a couple of months, say 6 months from here. So that would be end of Q1, maybe later. And then the third kind of models that I use, of course, that floor model, the 135,000. That's not based on stock to flow. It's based on other. It's a proprietary thing, but it's based on other stuff, technical and on chain. So yeah, and by the way, that's very good at, like the name says, at indicating bottoms. So I guess we will be above 100,000, above 135,000 at the end of the year, and then we'll continue to grow, maybe towards the stock to flow X model targets, 288 or even above. I would not be surprised even to see in Q1 or Q2 next year prices of 300, 400, 500,000 dollars. But I do think, and I noticed you were talking before in this show that I'm full bull. I am right now, but I'm quite sure that there will be a time when I switch from bull to bear, like I did at the end of 2017. And to be honest, I'm a bit of struggling with that, because I don't want to disclose it, because I want to at least disclose it responsibly and not be responsible for triggering the bear market. So if people have ideas for that, I think they're very welcome.
And so when you think about that $288,000 price, I think a lot of people have heard you say that before. But when you say that it could go higher, $300,000, $400,000, $500,000, is that just pure kind of FOMO and a blow off top that drives that, or is there something else that you're looking at that shows that, hey, maybe we do go past that 288 that the stock to flow model has there?
No, that will indeed be a FOMO, and that will be very clearly marked in the on-chain analysis, which is looking for certain kinds of transactions that which I called them before, but those are FOMO transactions. So if the algos see the FOMO kind of transactions coming in, then the end is near. And yeah, so I would envision, like for example, going to 500K somewhere Q2 or something, and then crash back. Well, maybe 80% again to 100K, have a bit of a bear market, and then continue another cycle starting with the halving in 2024.
Going from 57,000 today to 500K in Q2, back down to 100K, and then continuing into the next halving. While it sounds crazy to a lot of people, would be pretty consistent with what we've seen in the past in terms of volatility, both up and down. So it's interesting to hear you say that. Joe, what questions do you have?
Yeah, Plan B, thanks for doing this. I know I'm a big fan of yours and your models and your analysis, so I know a lot of others are also. My question would be around kind of the correction that you just spoke of, right? Which is, we're at 57, 58,000 now almost. You're saying that it's going to average at least 100,000 over this cycle, which is 2020 to 2024. So we obviously have to go much higher, whether it's 300,000, 400,000, 500,000. We'll see. But traditionally, there's also been an 80% correction. So is that something that you think will in fact happen again? And kind of how are you thinking about that in the long term?
Yeah, I do think that's exactly what will happen again. I can be wrong, right? Let me be very clear. I can be wrong, but I do think that 4-year cycle that is sort of triggered by the halving is a very real thing. It has to do with the scarcity of Bitcoin. It has to do with the shortage that we're seeing right now. Bitcoins are traded on exchanges, and the exchanges have some inventory of Bitcoin, and you can buy it, you can sell it, but it's basically not on-chain transactions. It's Bitcoins that are on the exchange, and you buy them from other sellers, and you sell them to other buyers. But if you look on-chain, so the Bitcoins that are in cold storage that large investors have, you can very clearly see these waves of shortage, and we're in one right now that will at least last another couple of months before it's really well out of sellers, if you will. But yeah, from there, and what other news will trigger it, I don't know. I do think there will be a crash, and it could be as large as the crashes we've seen in the past. We have had 3 crashes of 80%, and I see no reason why we couldn't have another one, which of course is always short-lived and an excellent opportunity to buy more Bitcoin. But it could be quite scary for newcomers, which is precisely what, of course, those cycles do. They shake out people that are leveraged, that are investing with too much money, that are not certain of their investment strategy, that are those people. You need those really committed hodlers, if you will, and they'll rise again.
John, what do you think?
Yeah, Plan B, nice to virtually meet you. Congrats on all the success so far. I know you reached 1 million Twitter followers in just about 3 years. So that's pretty impressive. I want to talk about your stock to flow model real quick. So you have it projected at hitting about $1 million a coin by 2025. Do you believe this? Do you still believe it? And then if so, how do we get there?
Yes, so I really do think that we have at least one more cycle to go in the stock to flow prediction. So yes, that would bring Bitcoin in the 1 million to $5 million range, and I really do believe that we're getting there. And so that would be the path that we're seeing right now. We're going from 57 or right now to 63, 98 in November, and 35, for example, or something above that, right? In December, and then FOMO starts to kick in. We go to 200, 300, 400, whatever, and then crash. And from there, we wait till the next halving, and the next halving will be another important fundamental and even maybe structural event for Bitcoin, because I think that's what people misunderstand, that it's all about the supply and the doubling of the stock to flow ratio, which is an important part. But the other part is that miners will have to survive that event, because their income, their source of income, and their revenue stream will halve, and they'll have to switch to new equipment, find better ways to fund themselves, and be much more efficient in their business. And if the miners and the whole business survives another halving, that's a major accomplishment, and that will trigger the next rise from, say, 100,000 after the next crash to 10x, 20, 30x at that amount, which is in the millions indeed.
It's pretty crazy, Plan B, when you start to look at this. When most people would hear, let's say 2025, $1 million to $5 million, that feels like it's a very wide aperture in terms of outcomes. Help people understand why it's so hard to pinpoint, $1 million to $2 million, let alone 1 to 5 million, right? I don't think people quite get kind of this idea of, even into Q1, Q2 of next year, if your kind of thesis plays out, you said, hey, 288's in the model, but 300, 400, 500, that's a pretty big variation as well. So help people understand like what drives that variability there.
Yeah, I think that's an important question, and it's funny to see that how naturally and logical that path of Bitcoin is to me, and how amazing it can be for newcomers and traditional investors indeed. And the trick is to look at it exponentially, so in logarithmic scale, if you will. Because it's not about the price level, it's about the growth level, the percentage growth that is constant or high at least. And maybe to explain that, if you look at my followers, which is 1 million now, which was unthinkable even a year ago, let alone 2 years ago. So 3 years ago, I started with I crossed the 1,000 followers boundary, and a year later I crossed the 10,000, and then a year later, so the second year I crossed the 100,000, and now in the third year I crossed 1 million. And if you look at that path, it's 10x every year or 20% every month, and so it's amazing growth, and people start to see it when you're big, but in fact it's a constant growth of 20% per month. And yeah, that was 200,000 new followers last month, but it will probably be 220,000 new followers next month. And so that 20% is constant. And the same is with the Bitcoin price. Bitcoin goes, let's say at 10x every 2 years. So 100x every 4-year period. And that is amazing. To hear that, but if you actually experience that or look at the data, but that's different. But if you experience, and as I did, of course, buying at 400 or 500 and then going to 4,000 or 5,000, and now we're at 40, 50,000. That's 100x, and there are people that have 1,000x their investment or 10,000x, and that constant growth, I guess, is very specific to Bitcoin and triggered by the halving period, the scarcity that's intrinsic in Bitcoin, and that makes it such a perfect store of value, and more and more people will recognize this unique property.
What's the thing that when you look forward, you're most excited to? Is there a price milestone? Is there a number of entities on chain? Is there some sort of kind of external milestone? What's the thing that you're like, man, when this happens, that's going to be pretty cool. I'm really looking forward to it.
Well, on the short term, I would be very nice if we hit that 63,000 mark end of this month, because I guess that's what really did it last time, nailing the 47 and 43,000 last 2 months. So 63 would be nice. Of course, the 100K. The 100K is sort of the make or break for the stock to flow model. So I really hope we hit that, and I'm quite certain. Or not uncertain, I should say, that we're going to hit that. And after that, I think the most amazing thing for most people, and also for myself, will be that on-chain model turning red, the FOMO transactions that will be detectable, and me as the full bull turning bear. And as I said, I'm struggling with that, how to communicate it. Maybe that's the best time to go dark. But I think there will be a time where we switch from bull to bear. And that, of course, is a great thing of a model, that it's not always bull, but that and you're not always a moon boy, but that you can predict the downsides as well. So yeah, I'm not looking forward to it on the one hand, but I feel it's going to happen someday later next year. But yeah, I'm very much sort of looking forward to that moment.
Do you have any thoughts on a Bitcoin ETF and how that could either support, accelerate, or be detrimental to stock to flow model?
Yes, stock to flow ETF will make Bitcoin available for the masses, for pop and mom and investors, and yeah, it will be a huge thing for the market. Although we, of course, think, well, you can buy Bitcoin right now. Why should you pay the fees that are associated with these funds? But it makes it easy for the crowds. The hurt will be coming then, and that will be a big thing. So yeah, I think it's coming maybe this month, maybe next month, but it will be there. Of course, the Gary Gensler from the SEC has already sort of nudged that it is possible to start a Bitcoin futures ETF right now, which I think has already been receiving applications for that at the moment. So yeah, I would be very surprised if that would not be introduced this year. And what I also found very interesting was that one of the applications and one of the interviews with one of the future ETFs, Bitcoin ETFs, was that they mentioned stock to flow model as one of the models that they're tracking for future value. And yeah, well, I think that's once you've seen that, once you understand the exponential growth and the 4-year cycles, yeah, I think it's an asset you cannot deny.
How about the macro environment? Things like interest rates or quantitative easing, both in the United States and abroad. How do you think about that affecting this? Is it something where Bitcoin just remains non-correlated and it's worth paying attention to, but doesn't ultimately have an effect on price? Or do you think that we've seen more correlation, and therefore, if there's some sort of tapering or kind of slowdown in some of those activities, that it could be negative for Bitcoin?
Yeah, I think it's very important. I think it's the one of the reasons that Satoshi, of course, made Bitcoin. It was against debasement, against money printing, which was very much present in 2008 when he wrote the white paper and the software, because that was at the peak of the financial crisis, the global financial crisis at the time. And the white paper was the Bitcoin white paper was published 45 days after the Lehman default. So yeah, it's very important. It's also one of the reasons that I started looking from an institutional investor point of view towards alternative investments, because I saw especially in Europe, of course, we have negative interest rates, and that turns your world upside down. That school or university doesn't teach you that. So how do you survive a negative interest rate environment, and what does that tell you, negative interest rate? So well, everybody's looking for yield and rates that are not negative. I started looking at alternatives and came to Bitcoin through that. So I'm very grateful to the central bankers for introducing quantitative easing and negative interest rates, because otherwise I would never have found Bitcoin. So yeah, I think what we also saw is that all the price movement, a lot of price movement in other markets, like the stock market, like the S&P 500, were related or correlated with quantitative easing and possible tapering and the money printing, if you will. So if money is printed, that money has to go somewhere. And first it will be to bonds, government bonds, but the receivers of those bonds, usually banks or governments, will spend that money again. And so it will end up in the hands of the second layer that receives that money. And some of those companies and people will buy equities, real estate, and Bitcoin. And that's why we see all these markets go up, because there's just too much money. And in a way, it's just, too much money chasing few goods. So all the prices of those assets go up. Asset inflation is very real these days, as all the real estate investors will notice as well, and equity investors as well. So will the markets decouple? Well, it seems like it today or this week, because Bitcoin goes up and all the other markets are not following. Even the altcoin markets are not following Bitcoin this time. So I guess in the end, Bitcoin is the ultimate store of value, consistent with my stock to flow model. It is not as scarce as gold, or about as scarce as gold today, but not as scarce as real estate today. So real estate is one of these big money store of values today. But in the end, Bitcoin will have the same scarcity, the same stock to flow ratio as real estate, and it will be portable and communicatable by a phone line, by an internet connection. So it will be better than gold and real estate together. And once people see that, the lids are off, and we go much higher in price than we're at today.
How do you think about those other assets, right? Either for your own portfolio or for those investors? Is this something where, let's take real estate investors, they begin to see that asset appreciation, they see their rents going up, they're continuing to make more and more money. And is it a thing where like that capital eventually will flow into Bitcoin as well? Because they understand store of value, they understand scarcity, they understand like a hard asset compared to that fiat devaluation? Or do you think that people who have been investing in the analog markets, like a real estate investor, they just have a hard time understanding buying a virtual item or something that is this like global, digital, decentralized store of value?
Yeah, both points are true, I think. So money will start to flow from real estate and gold and other investments towards Bitcoin, the new investment. And yes, it is a generational thing as well, because the older guys that are not used to computers, they will have difficulty with understanding virtual assets. You see it with Peter Schiff. I know a lot of people that are like Peter Schiff, the old gold bugs, if you will, and I was a gold bug at the time. But people that cannot program, that are late in the computer thing, they will not appreciate the virtual aspect of Bitcoin, and they cannot understand digital scarcity. So they'll clamp to real estate and their trusted asset like gold. But in the end, the younger people will turn up and have all the money, and those are people that have been taught computers, and they have been on their iPhone all day, and there's nothing scary about digital assets at all. And that's what you see in family offices. So the younger generation is pitching about Bitcoin, and the older generation is against it. And they try 1%, and that becomes 10% of the allocation. And I think that's how it will go. And even with my own portfolio, I was like, like most people, diversified, 25% real estate, 25% equities, 25% gold, 25% new stuff, alternative stuff, say Bitcoin. But that Bitcoin percentage grew and grew, and you learn and you think like, well, yeah, I'm not going to rebalance. I'm not going to sell my best running asset to put it into gold or something. So, or buy an extra house. Why should I? So yeah, I think it will be a very natural thing with generations, the new generations coming into power.
And from a gold perspective, everyone is very interested in the kind of the flippening, right? This idea that Bitcoin's market cap will eventually grow to be bigger than gold's. Most people will point to gold's market cap at 10, $11 trillion, and Bitcoin being right over 1 trillion, so kind of 10, 11x. One of the things I've been very interested in is I actually think that gold's market cap is going to collapse over time. And so the flippening doesn't happen around 10, 11 trillion. It happens somewhere lower. And maybe that's 9 trillion. Maybe that's, 6, 7, 8 trillion. I don't really know where. But just the idea that in order for Bitcoin to continue to grow, we are likely to see a collapse in gold's market cap. Is that your view as well, or do you disagree?
Yeah, I'm not a gold expert, but I know a lot of gold experts, and I talk a lot with them. So I might be wrong on the gold thing, but I agree that I think gold will eventually go down in market cap and lose that money to other investments like real estate or Bitcoin. What I think the big bet that gold investors take is that it will once again be used by central bankers as the backing of a new world currency. And that could very well be, right? The central banks are talking of the next Bretton Woods moment. They are talking about a global currency. Could very well be the IMF's special drawing rights, the SCR. And yes, maybe that would be a currency, an SDR backed by gold. But that's the entire bet, the entire play they're doing. So if that happens, of course, gold will pump, will go up in market cap. But I don't think they're going to do that. And in fact, Bitcoin is much cleaner with respect that it does not have to be backed by anything. It's backed by, the energy and the mining in Bitcoin, but not by another asset, and not an accountability problem that's associated with that, and that we see in gold, for example. Because how much gold is there in Fort Knox? How much gold do the Chinese central bank? How much do they really have? We don't know. And with Bitcoin, it's very transparent. It's all on the blockchain, and in the end, from a thermodynamic point of view, from an energy point of view, that is so much more efficient for the human race. And I guess, we will tilt towards Bitcoin because it's just better money.
I tend to agree. Do you think that eventually the nation states adopt Bitcoin and it kind of grows to be a global reserve currency? Do you think it's a currency of the internet? How do you see kind of the ultimate destination for this asset if you think it's better money?
Yeah, I think governments will adapt Bitcoin like El Salvador did. It kind of amazes me that not other states have and nations have adopted it, because it's the most logical thing to do, especially if they're under the pressure and regime of the IMF. If they're kept on a leash with debt, which is certainly something that most countries will probably hate, but of course the leaders of those companies will be greatly paid by IMF and to keep that status quo. But most countries would be better off by switching to something other than debt, and especially US dollar denominated debt. So especially in South America, Mid America, Africa, there must be countries that are going that route. And I following the Brazilian trend closely, because that government is doing some very spectacular stuff. And I'm also following some Eastern European countries like the Ukraine and the countries that belong to former Russia and are now sort of more oriented to Europe, but not part of the European Union. So they can switch to Bitcoin. I think some countries will, and I really hope that will happen. On the other hand, I do think it's in the end a thing that's not decided by states, especially in the United States and Europe. It's something that's also decided by banks that are already much larger than most states, especially states like the Netherlands, where I live, which is very small, and a typical bank is like a multiple in size of that small country. So companies, banks, and also people will decide that they park their money in Bitcoin and not in their negative interest rate yielding saving account at the bank, and that will be a large and growing force with that same exponential, constant exponential that we see in the Bitcoin price or my follower count or some other things that go exponential. Very interesting.
Plan B, I could literally talk to you for hours over the years as I've seen your audience grow, seen you put out more and more content. I've just been super impressed. And so I think this is true. Michael Saylor, myself, and you all have 1 million followers. My hope is that you beat me to 2 million. Because if you beat me to 2 million, that means that you've not only continued, but you've likely been right. which means that most people who are listening to this would be very, very big fans of you. So, just from everyone else and me, just thank you for all the work that you've done, all the contribution you've made to the community. It's pretty cool to see how somebody who literally I've never met in person. I don't know your name. I have no clue what you look like. I'm talking to a pseudonymous identity on the internet. And you've touched so many people, been able to build this large following, and it's all because of the quality of the work. It just stands on that alone is pretty incredible. So just thank you for doing all that.
Well, thank you very much. And thank you for that last minute boost around the 1 million as well. That really did it. And I'm going after you guys, right? I'll Sailor and you are above me. And I sort of calculated already that maybe before the summer, at the current growth rate, I could be number one. But who knows?
Well, listen, I'm here putting your link for people to follow you on Twitter in the chat. I may stop doing that if I know you're coming for me. No, listen.
Yeah. Thanks for everything, man.
Of course. I appreciate you coming on. I think my brothers, every day, they say, well, Plan B said. So they're fans as well. Anyone who's listening to this, make sure you go follow them on Twitter. And we'll talk soon, my friend.
Thanks, guys.
All right, bye.